Greetings, 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 greetings. What's up? What's up? This is Ernest Watson. I hope you guys are doing good out there. I hope everything's going well. Okay, so I got my candle exhaustion candle rule sword attack duration thing up here right now, and some people ask me to explain how this works, so I'm going to break it down for all of you guys who basically was trading Euro USD. I'm sorry that, you know, if your stop loss got taken out by this gigantic spike, it happened and just took a lot of people out of the trade. That was really unexpected. I didn't actually put a stop loss on that trade, but I got some trades open right now. And let's see. Yeah. So I'm just waiting for these things to finish at around what, 4? Yeah. I got them set for 4 p.m. All right, so let me get into explaining the bear versus bull candle attack duration tendencies. All right, so as you can see, we have the short attack. We have a rule that comes with short attacks. Now we have the medium attack, 49, 69, 89 candle rule, higher exhaustion. Long attack, 100, 150 to 200 candle rule, highest exhaustion. Okay, this is just something that I've learned over the years, that the market basically has displayed to me that after every 15 to 25 to 35 candles, it possibly could reach exhaustion and prepare itself for a reversal. After every 49 to 69, 89 candles, it reaches higher exhaustion and prepares for a higher degree of a reversal. And then the 100 and 150 to 200 candle rule is the highest exhaustion possible. This is actually how I got in on the trade with the Euro USD, because if you look at the candlesticks that were made from here to here, you can see that they are clearly approximately 200 candles. That is the highest degree of exhaustion that the market can make. And basically, once it has committed to a long attack such as that, it has reached the highest level of exhaustion. Okay, now, don't trust what I say, don't believe what I say. Go ahead and test it for yourself. All right, so basically, it's very simple how you use it. Let me go to, all right, my C chart. Very easy how you use this. How do you determine what is short, medium, or long exhaustion is like? You just take your crosshair and you go to the end of a move and follow where it goes. So that's 21, right? So that will fall under the category of the 15, 25, 35 exhaustion. Now, if you look what happened after, right? It made that move. What happened? A reversal occurred, right? Because it reached the short point of exhaustion. So now let's read the reversal now. Take it to from the first candle to the highest point. That's 32, right? Market went into consolidation afterwards. It reversed, but it was a small reversal after the 32 candles. So once again, that falls under what we call the 15, 25, 35 rule. All right. So you just take your crosshair and you go throughout the market and you look at these moves that the market of basically is making. So from here to here, it's 22 candles. And then what happened after the 22 candles? You see a reversal. All right, so let's look at this move from here all the way to here is 74 candles, right? So what rule does that fall under? that falls under the 49, 69, 89 room. It's in between that range. So the market has reached higher exhaustion because the more it committed itself to longer duration moves, the higher the degree of exhaustion. So let's see what happened after it committed to the 74 candles. It reached a point of exhaustion, right? So then what happened? A reversal occurred, and it occurred for 20 candles, right? So then it fell back into the high exhaustion rules, which is the short attack, right? 15 to 25 to 35 candles. So now after that, after it committed to that rule, what happened next? A reversal occurred, right? From here to here. Okay. And you can clearly see that the rule basically is it's pretty solid. It's the only thing that you have to look out for is determining when you're going into consolidation. This point from here to here is 66 candles. So, right, we look at our attack sheet and we can see that it fell under the medium attack. The market committed a medium attack. So who attacked who, right? If you look from here to here, right, it's 53 candles. The bears attacked the bulls for 53 candles. And so with such a long attack, they're going to be exhausted. And the bulls are then going to take advantage of that exhaustion. So what they're going to do is push the price up, which they've done. All right. So from here to here is 53 candles, and it falls under the medium attack rule. Exhaustion occurred, and the bulls took advantage of the exhaustion. All right. So now, if you go from the very top of this channel all the way to the bottom of this channel, what is that? 200 candles, right? But this is a consolidation period. So like I said, be careful of not just saying, yeah, they committed to exhaustion, so I'm just going to take the reverse. Always read the candles to see what's going to occur next. All right, so that's just to keep you safe. All right, so this is a 77 candle duration move right here. All right, so that falls under the medium attack. All right, so basically that's how you discover where exhaustion is occurring. It basically opens up your vision even more so. So here we have from this move to that move, a bearish move, which is 42 candles. Go ahead, reference your sheet, and that falls under the medium attack. It's within that proximity, right? So you could be expecting a reversal, and a reversal occurred right here. All right, 50 candles, right? So the 50 candles basically committed to the medium attack. The medium attack is the most common. The 15 and the short attack and the medium attack are basically the most common. So right here, that's 12 candles after the market exhaustion occurred right here, right? And you count right here, 50 candles. That's a medium attack. And from here to here was basically a short attack, right? So you look at your short attack, it's the 15, 25, 35. 12 candles is closer to the number 15. So it falls under the category in the proximity of a short attack. And then after that short attack, exhaustion occurred again, right? And look what happened. Another short attack. But then we fell into a channel, right? So always use, your price action and read the candlestick. So from here to here, it committed to 70 candles, and that falls under, of course, the medium attack, right? And then what happened? A big drop. So this is how you calculate the exhaustion points in the market. Basically, this is how you determine when exhaustion is occurring. And what I mean by exhaustion is like from if the bears attack and they attack downwards and they commit to one of the short attack, the medium or the long, then they are exhausted, because it's like the art of war. And just like in the fight, if you commit yourself to throwing attacks at someone, then basically your body cannot physically sustain that attack forever. So you will reach a point of physical exhaustion. And the same thing applies. It's just a universal law that you cannot commit to one direction forever. You just cannot do that. The world operates in a parabolic way. And basically, you cannot just go straight forever. You can't endure forever. Nothing is eternal. So exhaustion will occur in everything. It's just like in nature, it shows you that trees grow up and they wither away. It can't continue going upwards. You know what I mean? So basically, everything has its limits and exhaustion points. So like from here to here, you can see that's 29 candles, right? And it falls under the short attack rule, right? So then afterwards, what happened? A reversal occurred. You know, so that's basically, it's very simple. It's very, very simple, how to use that rule. And it gives you an basic direction of where you could be heading potentially, and could be heading after a move had occurred. What can be happening next? So from here to here is 19 candles, and then that's the short attack. So then we see a confirmation candle here and took the market down. Same thing occurred here, from here to here, 18 candles, a short little reversal occurred. All right, so from here to here, all right, that's close to 15, the number 15, so that's a short attack, and then a reversal occurred. From this point down to here, it's 18 candles, that's a short attack, and then what happened next? A reversal occurred. From here to here, 35 candles, that's the limit of the short attack. And then what happened after that short attack? A market went down, right? So basically, you just take your crosshair, which is your target. I always use my crosshair. 55 candles, that's the medium attack. And what happened? Exhaustion occurred. Let's go. Let's continue. 12 candles, that's close to the number 15, which is a short attack. And what happened? Reversal occurred. So all throughout the market, you will see that the candles conform to the rule. And this is, once again, I always teach whatever is not from me. It's always what the market teaches me. I never teach what I believe is right, or I think is right, or I believe someone or suggest someone should do. I always teach whatever the market shows me. I basically study the market for hours upon hours every day. I've been doing it for years. And I basically just, I get teaching, or I get taught from the market, not by people. So whatever I show you, it will basically be what the market has revealed to me. So this is 24 candles, falls under the short attack rule, and a reversal occurred. All right, so once again, use this rule with discretion, use it with confirmation, Don't just say, okay, we got 18 candles here, so I'm going to take a reversal trade. No, use it with confirmation, support and resistance. Use it with price action. Use it with candle patterns. Use it with confirmation. Use it wisely. You know, don't just make an aggressive approach to the rule. All right, so here's 30 candles from here to here, and the market trended down. No, these are exhaustion points, and here to here, 23 candles, that's the short attack, and you got a little reversal that occurred, then a little consolidation, and then we went up. Right? So from here to here, the market trended upwards to this point, right? And what's that? 114 candles. So you look at the long attack, that's 100 to 150 to 200 candles. That's the highest degree of exhaustion. So what occurred after that exhaustion? As you can see, once it reached from here to here, once it reached 100 candles, it committed itself to a very strong attack. Therefore, its exhaustion is going to be at the highest degree. And therefore, it came down. All right? So use it wisely. Use it wisely. Become familiar with it. Play around with it. Become familiarized with it. And just basically base your trades off of more than one confirmation, not just the rule. And 17 candles, that's the short attack. Here's the confirmation candles. You have dojis, you have tweezer tops right here. And we went up 27 candles. Short attack again. And we have tweezer tops at the top right here. Then we have what? We have our famous evening star. Take it down. All right. So, yeah, I think that basically shows us. Now, this is how to use it in, basically, you can also use it in sideways markets. If the market is trending for sideways over 80 candles, then you can expect that this thing could be possibly turning around soon. But yeah, that's up to you to decide, and it's up to you to use wisely. And I think that covers everything on how to use the actual. So here we have 20 candles. We went into a little consolidation, and then we went down. So don't suspect that after every attack that immediately the market's going to turn around. You also have to use at your discretion and use your insight and basically figure out whether the market could be turning sideways after that attack, because sometimes that does happen. All right, so here we have 15 candles, which is the beginning of the short attack, right? Take the market down, went down to the next exhaustion point, which is the short attack again. And what happened? The market reversed. All right, so I think I'm over explaining it, and I just wanted to show you. I guess it needed to be a little thorough because I needed to show how consistent it actually is. So from here to here, 40 candles, that falls under the medium attack rule. And what happened next? A reversal. Okay, here's a long move, right? Let's look from here to here. That's 125 candles. We have a small reversal here, right? Very consistent rule. I use it myself. Of course, I'm not going to give you anything that I don't use. That's not effective. 45. Okay. 14 short attack. Right. Then we're in a sideways market right here. All right, so yeah, play around with it, become familiar with it, and I hope that this helps someone, even if it's just one person. You know, I hope you take it and it becomes profitable for you too in your trading. For those who are biased against it, or for those who feel they are experts and they feel as if this doesn't apply or if it's garbage, then I would invite you to give me ways to improve upon it. I'm always open-minded. I'm not closed-minded to new ideas or, variations of a rule or whatever. If you find a better way to use it, don't just keep it among yourself. Share it with the group. Try to help others profit as well. Don't just be selfish and, take all the profits for yourself and keep all the profitable knowledge to yourself. Share it with the group. Share it with people. The more you give, the greater you get back. That's just how life is. All right. So with that being said, I'm out, and let me see how these things are doing. We got 48 minutes remaining until these win. Okay. All right. So guys, take care. Always be blessed. Keep your head up. Do not become discouraged about trading, because it's a learning curve in the beginning, but eventually you will start to see the progress that you desire. Never give up. Learn price action. Don't just depend on indicators. Depend more upon price action than indicators. Indicators, they get dismantled and destroyed when consolidation hits. And that's when they start malfunctioning. So as you can see, my indicator that I have on here basically is customized, but I'll get into that, I guess, in another video. I don't rely on the indicator. It's here, but I don't rely on it. I just use it as confirmation for oversold, overbought conditions in some cases, in other situations, but I rarely look at it. All right, so I think I'm talking too much. Love you guys. Stay strong. Keep a positive attitude. Make sure your mind is always clear, and stay focused on your goal, and don't let anyone stop you or let anyone tell you that you can't become profitable at trading or that you can't become successful. All right. So, all right, you guys, take care.